Hello everyone, Tom Kozlowski here with Lighthouse Wealth Management, and I want to talk to you a little bit today about a subject that we're getting a lot of questions on right now, and it's residential real estate. I think everybody knows what's happening in the market right now in terms of how strong the real estate market is. So I thought what I would do is give you a little stats, tell you where Lighthouse is coming from, and maybe give you some suggestions if you're buying or selling a home in terms of what you may want to be prepared for. So first off, according to the National Association of Realtors, right now there's about 1 million homes in the country for sale. And ironically, there's about 1.45 agents out there. So there's actually more agents out there than there are homes for sale. The inventory actually, again, according to the National Association of Realtors, is at the lowest level since 1982. So, if any of you are out there looking for a home, there's not a lot to choose from right now. And the markets, and it's kind of like this for most of the country. The hottest market right now, according to Realtor.com, is actually Manchester, New Hampshire. You're seeing a lot of areas that are just outside of big cities markets getting really heated up. And the reason why, there's actually about 11% of the U.S. population moved during the pandemic, that's quite a lot if you think about it, over 1 in 10 people. And of course, because people can work at home, and those people who are working near larger cities are paying higher rents or experiencing higher housing costs, if they can do the same thing moving out, again, in the case of Manchester, they're about 50 miles from Boston, they can buy a lot more for their dollar goes a lot farther, buy a lot more home for less money, and so it's raising all these areas. You're seeing it. I have a home in Austin, Texas, and we're seeing it there. So a little anecdotally, my daughter's looking for a house and went to make an offer. A house came on the market that day, and the agent, they were going to offer full price, but the agent said, we will not take any contracts unless it has an appraisal waiver. So basically, they know that the house, what they're asking for the house and what it may ultimately sell for is more than what it's worth. And that's not unusual right now, given the market, because of the supply and demand. So, you really have to kind of understand, what's happening in your market to be an educated either purchaser or seller. A couple other of interesting notes locally here in Frederick County. There's typically, according to some local realtors I've talked to, there's typically about 1,000 to 1,200 homes in Frederick County for sale at one point or at any one time. And currently there's about 275 homes that are available. So again, you're seeing that, the supply, demand, and why houses are not lasting long. So, some of the questions we get are, how long is this going to last? Is this a bubble? Of course, nobody ever really knows for sure when there's a bubble until after it's popped. But what we think is happening is it's a lot different than what happened back in the housing crisis in 2008. And the reason being is back then, banks, financial institutions, basically if you had a pulse, you could get a loan, okay? They had no doc loans. You didn't have to show any proof of what your income was. They were loaning out 100% of whatever the contract values were. And so any type of slip in the market would put people underwater, and that's why we had the plethora of foreclosures, short sales, and so forth. What's different about this market is that there is a lot more houses being bought, first off, with cash. Secondly, banks are very strict, and most people, if you have to go through to get your loan, you realize that process it's not gotten any easier. They scrutinize everything. They'll go line by line. They really want to know what they're underwriting, that they're going to have a good chance of the loan being paid. So you're seeing more and more loans where people are putting at least a 20% down to typically avoid the mortgage insurance. So even if we get a slip in the market, it starts backing up, we won't have as many homes that would be underwater, if you will, or where people owe more money than what they're worth. Also, I think the market's going to stay pretty strong for a while, of course, because the economy is so strong. We've talked before that we're going to get we think we'll have record GDPs here in the U.S. this year, and with that, people have money, the stimulus money that's coming in. So there's a lot of factors on why I think the market can stay strong for for quite some time. When I say quite some time, certainly for the next year or two, possibly, I think you can still see the market staying really, really strong. So with that said, a couple of things. If you are purchasing a home, a couple things I think you want to do to be prepared for this market. So if you're purchasing a home and you're going to need financing, do get a pre-approval. Most lenders or mortgage brokers that you're working will give you a approval letter saying, hey, this person's approved for X amount of dollars, so that when you're out there and you or your realtor are presenting an offer to a seller, then they know that you're capable of buying that and they will entertain your offer. Be prepared that if you're looking at a house that just came on the market, you could have multiple bidders. We've had tons of stories where homes come on the market for on a Friday. They'll have 40, 50 showings on a Saturday, and the sellers say best and final offer by Sunday night. That's not unusual, and so they may have several offers on that home. Also be prepared that the home to pay above offer price. Again, used to be before, if you had a house that was going on the market for $400,000, you're figuring that the seller's got a little wiggle room there. You may offer them a little bit less, but that's just not the market that we're in. So be prepared that you may have to pay a little bit more for that. Which is one thing that kind of seems opposite of that, though, is also make sure you don't get carried away or let your emotions, because when the market gets like that and it gets hot, there could be a frenzy. And while you may have to pay a premium price for a property that you're buying, don't go outside your means. Know who you are, what you want for a mortgage, your finances, what's comfortable. Try not to get caught up with overextending yourself, because at some point in time we will get a market correction in the real estate, or it will slow down, and you don't want to pay an exorbitant amount over what the value of a home is, because you may have a problem, not now or not next year, but maybe 5-7 years down the road. Now, on the other end, if you're selling your home, okay, we've got a number of clients that have rental properties. They may have had a townhouse or a house, moved to a new house, and so they'll ask us, is now a good time to sell it? If the market's going up, should I keep it and try to make more? Well, a couple things you want to look at when you're deciding if you want to sell your home. So let's just say, for instance, it's your primary residence. Well, of course, if you're going to sell your home, it's a great time to do so, but also, where are you going to go? Because if you're moving down the street or moving nearby, you may pay just as, you have to pay more for that second house. Okay, so understand what you're going to do if you decide you're going to put it on the market, where you're going to go, and so forth. Another thing is pricing. I do recommend typically using a realtor. Certainly, I do believe that they add value, can add value to your sale process. We had a client one time who wanted to put their house on the market for about $325,000, and the realtor suggested, they said, you know what? If we put this house on the market for $295,000, we'll get multiple offers. And sure enough, they did, and they ended up selling the house eventually above $325,000. What it did is it created a fact that, hey, this house is probably undervalued, we better jump on it, and more buyers ended up coming in and giving offers on it. So working with a professional, I think, is really, a realtor in this market can also save you money or get you a higher amount for your home if you're selling it. The other thing I wanted to mention to you as well is capital gain rates right now are low with the tax cuts, 2017 tax cuts. Right now, the highest rate for capital gains is 20%. So as an example, if you're married filing jointly and you have your income $0 to $80,000 of taxable income, there's actually zero capital gains. It then goes from $80,000 to just under $500,000. And if that's what your taxable income is, then your capital gains are 15%. And if you're a high income earner and over that 500,000 approximately, you're at 20%. Now, there's a talk with the new administration and Congress is they want to raise the capital gains tax. We've heard almost doubling to 40% for capital gains on high income earners. So if you have another factor in determining if you want to sell, especially say a rental property or another home, you want to take a look, consider that, because while waiting a year, you might get a little bit more for the home. If capital gains do end up going up, you could end up netting a lot less on that. The other thing is to recognize, and I think most people do, is that the current tax laws also allow you an exemption, each owner, a $250,000 exemption on capital gains. So as an example, if you have a house that you've lived in 2 of your last 5 years, so you can own a couple houses, but if it was your primary residence 2 of the last 5 years, and you sell your house for a gain, if you're single, you would not have to pay tax on the first $250,000 of gain on that house. If you're married, that's $500,000 that you can exclude. Now, so you can do that once every 2 years. So if you are mobile enough to have several different homes and live in one for 2 years and sell it and made a profit less than those numbers, you wouldn't have to pay capital gains tax. You could do it again 2 years later, 2 years later, and so forth. But it's good to know that, because especially for those of you who have rental properties, you may have been using depreciation, for tax purposes, and then your cost basis, what you paid for the house, it goes down if you depreciate it. So you could have higher capital gains. So the idea behind this, again, is understanding what those capital gains rules are, what the outlook possibly is. Again, for a number of people, we are actually encouraging them that if you're thinking about selling your rental property or other home, that if you have to pay capital gains, they're pretty low right now. It may be time to, you want to take that as a factor. And also if you qualify for that $250,000 per person exclusion. Okay, so with that said, of course, if anybody has any questions, give us a call. We're happy to give you our opinions on what's happening. You've always heard the term real estate is local, which is true. We happen to have a national boom, but of course there are pockets that aren't as strong as others right now. So again, if you're out there in the real estate market to buy or sell, again, be prepared, understand what your market is, and good luck out there. Thanks.